2021. In other non-food stores was negative 7.2%, such as second-hand stores, toy stores, sports equipment and clothing stores down 6.2%. Clothing store sales volumes in October were only 0.5% above pre-pandemic levels. That is interesting. I will go on. I'm just going to keep going for a second, just to have a look what else is in the chart as well. In fact, there's an awful lot in there as well, including the proportion of retail sales online. That's interesting, fell to 27.3% in October 2021. That is the lowest portion since March 2020, but still substantially higher than February 2020, i.e. online is abating, but it's still significantly higher than we were before the pandemic. What about, have you got another blockbuster producer price figure for me?
I do have that. I just want to mention this in passing, though, because it's something that we discussed with Michael O'Leary, and we've just got a bit more information this morning. The Ryanair shares will delist from the London Stock Exchange. Following subsequent shareholder engagement, Ryanair has decided to request the cancellation of the London listing. The company will continue to have a primary listing on the regulated market of Euronext Dublin. The volume of trading shares on the London Stock Exchange does not justify the costs related to such listing and admission to trading. This is effectively confirmation of something we already heard way back when we talked Ryanair's third quarter earnings. But I think for some it will be seen as another disappointment for the London market that we have a business that's decided to remove its shares from the London Exchange. Okay. But the broader point, I think, is one that Michael O'Leary explained, that he felt that given the liquidity in the Ryanair shares on the London listing, it didn't justify
that's the
continued
key.
fees.
Will the company miss that liquidity, which inevitably comes from one of the largest markets? Will the Dublin market be able to handle the volume that will... No, of course, you'll be able to handle the volume, but it's a question of what you lose by losing that London liquidity. And obviously, they've made that calculation. Now, you've got some abating inflation figures for us, have you, or not?
October PPI number, 18.4% year on year. The forecast was for plus 16.2%. The month on month was forecast at plus 1.9%. The numbers come in at 3.8%. So this is obviously significantly ahead of the expectations around the PPI figures. And again, it will increase the pressure, I think, on Christine Lagarde and the ECB. Christine Lagarde is speaking later, so if you can, try and stay with us for the full 3 hours, because we are expecting to hear from Christine Lagarde, who is increasingly being targeted by German newspapers like Bild, very populist, which is now accusing the ECB of missing a trick when it comes to starting to tighten monetary conditions because of the fear of inflation running more rampant in Germany. These latest numbers will do nothing to ease those concerns in some quarters.
Well, that was the Jeff Gable point we were raising, and we raised ourselves, to be fair, that there is just a palpable fear of policy action now creating a greater effect than it has ever done as well, compared to rate rising cycles in the past. Did you do the year-on-year figure? I don't think you did you?
Yes. Yeah,
you did the 18.4.
Yeah,
I beg your pardon.
Yeah.
Sorry, I only heard I was somewhere else. No, I was doing 8 things at once on Ryanair, but I tried to listen to you.
Yeah. What about the markets then?
Oh, no, I've got to stay here for a bit. 18.4% year on year in October. That is quite a staggering figure. If only, in fact, we've got a brilliant guest. I just looked through the guest hosts. We've got a brilliant guest host, so I will go to the markets because I actually want to hear what he has to say as well. I'll do this very quickly, actually. We don't need to spend too much time on it. The Dow was down 0.17%. The SP 500 and the Nasdaq all rallying in the session yesterday. What did we get? We had consumer discretionary moving to the upside. We had oil coming off a little bit, but in terms of the stocks. But we have seen, I'll just do it quickly, Brent and WTI putting on a couple of bucks actually in the last 24 hours. All that talk we had in the previous session about declines on the back of oversupply and what the SPR was going to do and what the Chinese were going to do to release more stocks. Well, that rhetoric lasted less than 24 hours because we're now back up at $82 a barrel. So very interesting, very precarious for those who are very concerned about price. Gold. We look at gold, it's there, 1858. Let's have a look at the Asian indices. The Hang Seng, as we've mentioned with Alibaba, is down, but not down as much as it was earlier. The Nikkei is up. The Shanghai Composite is up by 1%. ASX 200 trading 0.23%. higher. European futures, they look robust, I think. Yeah, here we go. A 71.72 on the CAC 40. The DAX futures called up 0.5%, as indeed is the FTSE. Jeff, we have got a great guest host, so let's delay no more.
Koku Agbu-Bloor joins us, Global Head of Flow Strategy and Solutions at SocGen. Koku, cards on the table already. You already made the point in your notes that you agree that inflation is perhaps not so temporary and will run a lot stronger than previously I think we'd had signaled. What then do you think the implications are for investors at this point who are buying financials, they're buying tips, they're getting themselves exposure to inflation-related trades at a time when the central banks actually at this point seem to be trying to tamp down expectations that they will begin to move on the back of inflation running hotter?
Yes, hi guys. I think it is an interesting environment because growth is clearly still pretty strong. We have roughly 5.5% real GDP growth in the US for 2021 and 5.1% in Europe. And next year is going to be dropping by roughly 100 basis points, but still between 3 and 4% real growth. So you have to add inflation and you get to nominal growth of between 6 and 7%. So net, you're still in a very strong environment, and equities in that context are likely to do pretty well. And bonds, which is quite interesting, is the only market that is not worried about inflation, because you've seen recently a flattening of the yield curve, which, by the way, could be bad for banks in terms of net interest income. So I think we are in an environment where inflation clearly is a bit likely to stay with us longer than expected, but the path of least resistance is still for a normalization of the supply chain disruption, and therefore you'll see a easing of these high prices. So long story short, you are still in a pretty decent environment for risk assets, and the bond market is not panicking yet because it sees inflation as transitory.
Well, short story long, there is an argument that the shape of the curve has more to do with supply at this point further out on the curve than it actually does about signaling real investor expectations around the shape of the recovery. Do you buy into that at all at this point? Because obviously, given the growth rates we're seeing here, we'd expect the curve to be steeper to show that growth expectation is reflected in the curve and expectations around official rate strategy. But obviously the flatness is sending other signals. Is it technical or is it meaningful?
Very good question. I think it's 50% technical and 50% fundamentally driven. So I think the most important point here is who is the elephant in the room when it comes to the yield curve. So the Fed has been buying trillions of the 10-year part of the curve, and it hasn't unwound that part of the curve yet. And therefore, if you're going to raise interest rates without having unwound all the trillions you've bought, you are inevitably likely to flatten the yield curve. And there was a paper by the Fed Research Center that sort of confirmed this point. So what you need to do is essentially see a period of balance sheet runoff to normalize the curve and inject some term premium before you raise interest rate. But it is also driven by massive demand by a pension fund. You have the asset allocation flows as well, because equities have outperformed bond by so much that on a quarterly basis, you'll see rebalancing flow out of equities into bonds. There is also this very interesting dynamic of massive cumulative SX saving of roughly $2.5 trillion in the US, which is 10% of GDP. And that money has to find a way to be redeployed. A bunch of it is in the economy, hence the revenge spending we're seeing, but another decent chunk is in the financial assets, so equities and bonds as well, because the marginal propensity to spend of the rich is obviously lower than that of the lower income household. So that money is flowing back into financial markets.
Yeah, Koku, good morning to you, my friend. I don't see how we can have that bond market panic you mentioned there when everything you've just said thereafter, i.e. structurally, we have so much CB buying the trillions, which is going to take donkeys to unwind, plus the pension fund buying. I don't see how structurally you could get panic in the bond market. That's my first question.
Well, I think you can get panic in the bond market if inflation turns out to be more permanent than transitory. But again, I mean, the balance of evidence suggests that it is likely to be more transitory than permanent. Therefore, I think the bond market is not completely irrational in the way it is pricing the curve, because as you tighten monetary policy, because you also need to add the fiscal reduction in terms of spending, because the support the economy has had from fiscal is going to be much lower going forward. So you have a bit of a double tightening by the central bank and also by the fiscal authority. So therefore, long-term growth rate over, out to 10 years is likely to be slower than what it has been over the past 2 years.
And in terms of what happens when there is not a reckoning, but we get some form of normalization, which we all hope to see at some stage, what a normalization looks like, I haven't got no idea anymore. But we've had the everything rally, and people talked a lot about the everything rally. What happens on the other side when the bond markets do take a step back, and equities, do equities become a destination for that money, or do they fall in tandem?
That's a very good point. And this is something a lot of investors had feared, which is the 2018 scenario where the Fed started to tighten monetary policy, and then you got the Powell pivot, as it's called, around November 2018, where bonds and equity fell at the same time because of this sort of tightening of monetary and financial conditions. I think this time, though, is a bit different, famous last word, because you had trillions of fiscal stimulus, which is something that hasn't really happened historically to that magnitude. So that money is essentially fitting through the economy. And the other very important point is the green sort of transition, which is driving a lot of capex and investment by corporates, creating a huge amount of momentum. You have high commodity prices, which generate a huge amount of earnings. So the equity market is supported by something very fundamental, which is very strong earnings. And that's why you see the S&P doing so well. And in a simple context as well, where you have negative real yield. So TINA and FOMO, so there is no alternative, and the fear of missing out is essentially driving asset prices.
Just one to finish then. What do I want to own today as we run into the butt end of the fourth quarter, when we're looking maybe for a bit of a seasonal bounce perhaps, but where should I be spreading my bets?
I think you want to be essentially diversified across sort of equities exposed to the green transition, so mining, capital goods companies, but also have some exposure to some emerging markets. And China is looking interesting now, given how equity risk premium has expanded dramatically. But I think a diversified basket of stock is the best bet, because what you're noticing are these violent sector rotation, depending on how the volatility of the yield curve is behaving. So a flatter yield curve will be bad for banks, but if it re-steepened, then banks will benefit. And similarly, the capital goods stocks and the industrials will benefit from that structural green transition investment cycle, which, by the way, is one of the most interesting element in terms of a new green cycle, if you will.
Okay, we've got to leave it there. I was just thinking, actually, the last time I saw you around the set, a couple of years ago. I can't wait to see you again, my friend. Hopefully, one day when this is all over, we'll get you around the desk. We'll have you for 2 hours.
Absolutely.
Thank you, Koku. Have a great weekend. Agbo Bloor, who is the global head of flow strategy and solutions at Societe Generale. Right, coming up on the show, do not miss our first on interview with Sacha Poignonek, who is the CEO of Jumia. As the so-called Amazon of Africa looks to build an e-commerce giant for the next 100 years. More on that after the break.
Good morning, everyone. This is Joe from New York Trading Room. I'm still waiting for a nice price action so I can take a gold trade. You can see it's a good time to buy right here on gold, but the problem is we have a big candle here. So I was watching to see if the price will hold or not. So when we usually have, like, you see, when we have a big candle like this, usually the market keep going higher. So it's the same thing here. When you have a large candle, the market keep going down. So just be patient. We need to wait for the right setup so we can go in and out very quickly. I will try to make a summary so the video will not be if you want to see the whole session like 1 hour, you can see it, but I will do like 5-10 minute summary also, in case if somebody don't have time to watch the whole session for Asia or London. So I usually have long video and short video. If you have time to watch the whole thing, is fine. If you don't have time to just 5 minutes, 10 minutes, I will just post the video, okay? And another video.
Africa's largest e-commerce platform, Jumia, sees orders reach a new record high of 8.5 million in the third quarter, marking the firm's fastest growth in 7 quarters. The strong earnings come after a shift to sell more groceries and other more frequently bought goods. Well, I'm delighted to say Sasha Poyanek has joined us, the CEO of Jumia as well. Sasha, this is really exciting. We know that long before a lot of e-mobility existed in Europe and the West, the Africans had it sewn up in many, many ways as well because of necessity. So tell me about e-commerce in Africa. And I guess sub-Saharan Africa is perhaps so exciting in many ways because of the demographics.
Yes, very well. Thank you for having me, and great question. I think we are active in 11 countries, and in those 11 countries, there's about 600 million people today. And as you pointed out, this demographic shift is this population is growing very fast. And thanks to the mobile, we've got a lot of consumers and a lot of people who are on the internet. And the level of development of retail in those regions is often, under, or let's say, less developed than Europe or the US. And that gives a great opportunity for people to shop online. And I think that's what we are doing here.
Leading obvious to our viewers, and I say this to our Russian e-commerce guests as well. Africa's a very, very large place, and the infrastructure isn't always at its best as well. That presents a couple of obstacles, doesn't it?
Yes, indeed. The logistic network in Africa is not the same as we know elsewhere. And this is why we have built from day one, when we started the company about 10 years ago, a logistic platform, right? And this logistic platform is, comprises warehouses, and we work with several hundreds of local partners, and we have thousands of pickup points, which are spread across the countries. And those packages that we deliver, they are flowing to the big cities, to the secondary cities, and also to the rural area. And of course, we built this logistic platform over the years, and now part of the exciting developments that we have announced in the last few quarters is we've opened up this logistic to third parties, and we've got now companies, businesses who are not selling on Jumia, who are starting to use this platform. And we've announced that in Q3, we reached $1 million of revenue from logistic third-party business. So, for us, we see ourselves as a platform with the marketplace, the logistics and Jumia Pay. And logistic, we had to build it, but now it's a great asset that we are starting to monetize.
Let me ask you, Sasha, about the COVID impact. We've obviously seen in other economies, it's been a driver of e-commerce growth. Can I ask you just to unpack the situation in your business for us, whether you think it's been an important driver, and if so, how is that changing as we see vaccinations becoming a little more widespread?
Great question. For us, it's been a bit the opposite, to be honest, because in most of the countries, the measures which have been put in place were measures of restrictions of movements and mostly curfews at night. And so during the day, consumers could pretty much live their lives, right? Pretty much. And at the same time, we've had a lot of supply disruptions from, supply chain and sellers having difficulties to source the products and to drive production and so on and so forth. So it's been up and downs. For example, our food delivery business for many, many, many months, the restaurants were closed at night, right? So even if people were at home, they could not order from those restaurants. So that's just an illustration. So look, for us, it's not been the same as the other region, but certainly we've taken and we've used this time to really continue to strengthen the relevance of the marketplace. And I think now the numbers that we see in Q3, the record number of consumers, record number of orders, I think they're showing that we're doing the right things and that, this opportunity of e-commerce in Africa anyway is very large and is ahead of us. So I think we didn't get so much boost from COVID, probably more disruptions, but the opportunity remains the same.
Sasha, apologies, we've got big CEOs queued up as well. So look, very nice to see you. Keep us in touch with your story as well. It's absolutely fascinating what's going on. Sasha Ponyonek, who is the CEO of Jumia. Thank you, sir. Right, we are going to take a short break. As I say, we've got a big CEO after the break as well with Karen. These are the opening futures marks, and they are positive. Certainly if you're long the market. If you're negative, short, well, never mind. We'll be back after short break regardless.
So right now, EuroCAD, we have a sell signal. So any rally you sell, like this was a good sell, this was a good sell. Like we discussed, you wait for 3 green candles, then you short. So we have EuroCAD has been in a sell signal all day. Same thing, YM, it's a buy signal. I didn't see any 3 red candle. Maybe this is the one here, and the market did very good after that. We have a sell signal here in Euro OC, and you can see after 3 green candle you go short and it work very good. Pound dollar, it's a buy signal right now, and this was a good buy after 3 red candle. So, and is doing very good so far. You guys take any trade you like. If you like dollar yen, if you like pound dollar, pound New Zealand, Euro Aussie, we have like timber. You can pick whatever you want. And Bitcoin, if you're trading Bitcoin, we have a sell signal. So you're looking for 3 green, and we get 1 here, a good sell signal. And so any rally you can sell. I don't see it wise. We don't have a lot of liquidity.
Your headlines. European markets poised to open higher, but inflation concerns looming as UK retail sales and German producer prices come in far higher than expected. Ryanair says it will delist from the London Stock Exchange, retaining a primary listing in Dublin. And Germany unveils fresh COVID restrictions focused on the unvaccinated as acting Chancellor Angela Merkel says action is needed now.
The situation is highly dramatic, and it will be very important now that action is taken quickly. That action is taken consistently. That better control is taken.
The pandemic has pushed back gender pay parity by an entire generation, with these 2 years of crisis adding 36 years to the remaining to the time remaining to close the gap. 36 years sounds like more than one generation. According to the World Economic Forum, equality and inclusivity in a post-COVID world are key themes at this week's Women's Forum in Paris, as the event marks a partial return to an in-person format. So who better to be that person in Paris? She loves the place. It's Karen. Hello, Karen.
Good morning, Stephen. Lots of big topics here as part of the conversation. Typically a huge focus on the gender pay gap. Where are we going and where are women in terms of achieving those leadership roles? We mentioned some of the stats there, but women have been on the front line of this crisis. 67% of healthcare workers are women. And then domestic violence has been another key theme here, a correlation to a public health crisis as well. So we're going to talk about those themes, but also the big topics that women should be talking about that are happening in business conversations. And joining me now to kick this conversation further along is Thomas Bibel, who is the CEO of AXA. Nice to see you. Thank you very much for joining us.
Good to see you, Karen.
I think that's the bell saying the proceedings are starting and you're on stage soon. But I want to pick up on this pay parity gap. 36 years behind is where we are on the back of the pandemic. What's happening? Are CEOs just too focused on disruption, digital acceleration, climate change, the long list of priorities on the back of the pandemic, and just taking their eye off gender parity?
I don't know what other CEOs are doing, but certainly I am not distracted by it. It's an extremely important topic. And for me, there's two topics. There's one topic, how can we really make sure that, all women and men are well represented when it comes to leadership positions? And secondly, how can we deal and close the pay gap? And we have made a very clear commitment. We want to get to gender parity in the leadership positions by 2023. We want to close the unfair pay gap by 2023, and we are working on this already. So for me, those are two priorities that sit at a very similar level than digital transformation and everything else.
Is there a short and a medium-term problem here? I mean, short term, we know that women are taking on more caring, and that can mean in the home, taking on responsibilities because of COVID. Do you need to bring more women back into the workplace first on the back of this pandemic, as well as tackling those leadership problems where women are just not getting access to the top jobs?
So I'm very concerned about one.
So you can see I'm following the rule here. I'm waiting for 3 straight green candles to short, but we don't have 3 straight green candles, so we have only 2. So you can see it's not, I don't like 1 green, 1 red. I need to see like 3 red if I'm looking to buy, or 3 green, straight green, So I need to see something like that, okay? But if I have 1 and 1, 1 and 1, this means the market is sideways. So right now, I never have a chance to get a 3 green candle so I can short the gold. That's why I'm waiting a little bit. Okay. So you should understand by now why I'm waiting, because I'm waiting for 3 green candle. This was good here to short, but I didn't get filled. The market went down and I saw the price right here. I don't want to short here on the bottom. So just be patient and we'll find the right one.
very much on the agenda here. You've nominated this as a decisive decade to fight climate change, and on the wash-up after COP26 in Glasgow. Was it a flop? Are you concerned that we didn't make enough progress there?
So look, climate change is such a massive issue for us that every day we lose is a day lost for progress. And therefore, I'm very focused on what can we do every day from now on to really make a difference. And therefore, obviously, AXA has decided from very early on to be a core actor in this. We've been the first ones to get out of coal. We've just announced recently to massively reduce our investment and our underwriting in new oil exploration. We really want to be at the forefront. I am not waiting for governments. We need to be there. We need to implement, and we need to lead the way.
Can I ask how big a difference the insurance and asset management community can have versus, say, banks when it comes to tightening the noose around the polluters? Can you have more impact because of the number of companies that operate in the space versus, say, the banks?
So look, on the investment side, we are obviously, if we come all together, we are a very large force. Nevertheless, if you want to today, finance a coal factory, even if all banks, asset managers and insurers will tell you you don't get any money, you always find somebody who will finance you. However, on the insurance side, it's different. If you have no insurance, you will have no financing, whether it's from a bank or from a private individual. And therefore, I believe, and that's why AXA has launched the Net Zero Insurance Alliance, which is to say, look, we need to apply in the process of really assembling a group of the top insurers worldwide. We have 8 already on board to make sure that we are trying to avoid insurance of projects.
Now, let me match the two conversations. Are women part of this conversation around climate change? Because it seems as though it's very technical, areas of expertise, particularly around engineering, for instance, and solutions that may not be typical female jobs. How do we get women as part of this climate change conversation?
Certainly in our case, women are very much part of it because the person who runs all the underwriting at our very large company, or the company that's doing large risks, is a woman, a very capable woman who is very much involved in that discussion.
I want to ask you too about the French election. We are counting down to April next year. What do you make of the scene at this stage? You're waiting for Emmanuel Macron to declare his candidacy. Do you think political stability is an issue we need to worry about in the business community as we count down to next year?
So look, it's far too early to even dare to make any suggestion what could happen because we don't even know who will be the candidates. So a lot can still happen. I think what is very important, and I put a little bit, I put it on the European level. We live today in a world that is highly uncertain, a world in which we have very different geopolitical tendencies relative to what we used to have 10 years ago. I'm a big believer in a strong Europe, in a Europe that has a very clear agenda from an economic perspective, from a societal perspective, but also from a defense perspective. Therefore, we need strong leaders in terms of presidents, chancellors, and so on. And therefore, I wish that France will elect somebody who is a strong leader, who contributes to a strong European agenda, because the challenges we have today have never been that big.
A strong Europe and a strong Europe agenda does not really sit well as we talk about populists, and there's plenty of them on the left and the right as we count down to the election. How concerned are you about them having a voice as we come to the polls? Because there's a lot of issues that they can seize upon. One, of course, being the health pass here in France and how it's been used fairly widely across society. They're argued it takes away some civil liberties. Do you think the populists will have a strong voice when we come to the ballot next year?
They will have a strong voice, and they already have a strong voice. And I think it's good that the society has a strong voice. The danger that we are running into today, and if you ask me what keeps me awake at night, it's the question around social fragmentation. We live in a world that is more and more fragmented. And why is populism coming up? It is because people do not feel represented and do not feel heard anymore. So we need to go back to a way where we listen to people, where we take their input, and where we also find a new solution. Because 30, 40 years ago in Europe, there was a clear dream. No war anymore. If you ask people today, what is the dream of Europe for tomorrow? you will get very little answers. And so that narrative of what makes us, stretch ourselves for tomorrow is something, as a society, is something we need and we don't have today.
You might be worried about politics and political fragmentation. A lot of other CEOs are worried about inflation and monetary policy. And I want to ask you about that because we are counting down for a number of minutes to Christine Lagarde speaks as well. And there does seem to be a divide now between where the ECB is at in terms of very easy monetary policy and other central banks. Are you concerned about that as you chase yield across the globe? We could end up with a situation where we have very low returns here again in Europe and other central banks changing the dynamics in the framework where there are better returns elsewhere.
So when you look back at the management of the COVID crisis relative also to the management of the 2008 crisis, one can clearly say that governments and banks have done a good job in managing the crisis, because after the crisis now, we are in a situation where we don't have massive unemployment, where we don't have massive bankruptcy, and where the economy is restarting. So they've done something right. The big question is now, how do we get back to a normality? And so this dosage of, what is happening to interest rates, what is happening to inflation, this will be absolutely key now, because we are in a different situation. We have spent a lot of money on quantitative easing. Many of the fiscal budgets have been exhausted. So to prepare yourself for the next crisis means getting back to normality in a controlled way, also to have means again to fight the next crisis, because it's not the question if the next crisis will come, it's a question when will it come.
I understand the argument about having ammunition, but Doves would argue we're not through this crisis yet. If you look at various parts across Europe, we've got more restrictions coming back into place over the winter months with concerns around a further COVID outbreak. How do we judge that risk but still move towards the exit? What is the balance here?
No, there's clearly a balance. And if you go further than Europe, you will have many countries that haven't even dealt yet with with COVID, because you've got many countries with very low vaccination rates, with very low means to even fight the crisis. And so for me, COVID is long from being over. And that's why we have to be very careful when it now comes to the going back to a new normality, which is balancing out a short-term situation of more COVID, a situation where you have inflation and where you have low interest rates, and making sure that the right cocktail is being found to manage stability and not get into a disruption where you have another shock.
We all know it's about the right mix of ingredients when it comes to cocktails, not too strong, not too light. Thomas, thank you very much for joining us here. Thomas Rebel with us, the CEO of AXA. And I hope that gives you a flavour of the conversations that we're having here at Women's Forum. It is about gender parity. It's about how you close the gap. But it's also about the much larger issues in society too around climate change at the moment. How are women part of that conversation where you don't have just huge decisions being made around the planet? Are women not part of that conversation? So we're tackling that. But of course, the dynamics too around monetary policy, the economic environment on the back of COVID, incredibly important to women. So a lot to talk about here. Maurice Levy from Publicis will be joining us a little bit later on. Also, Diane von Furstenberg. I'm sure that name rings a bell with a lot of women over the years who may have worn one of her iconic wrap dresses, but she's also an iconic feminist. And we will be talking to her about her thoughts around this conference as well. So I'm going to toss it back to you in the studio on that note.
Terrific, Karen. Thank you so much for that. Germany's acting Chancellor Angela Merkel announcing a new set of measures to curb the rising number of COVID-19 cases and increasing hospitalization rates. Unvaccinated people will now be barred from entering some public venues in parts of the country where rates exceed a certain threshold. Angela Merkel highlighted the importance of getting the jab.
We know, and it's unfortunate. We could be better off if the vaccination gap wasn't so big. And that's why many measures that need to be taken now would not have been necessary if we had more vaccinated people. And it is never too late to get vaccinated. Even now, you can still make a good contribution for yourself and for the community with the first vaccination.
Well, let's get to Annetta, who has more detail for us on exactly what these restrictions will now mean, Annetta, and whether they will begin to have an impact on service sector growth.
And most likely, that's at least the first take by certain economists. For example, chief economist of Commerzbank did write in an early note today that there will be a dampening factor on the service sector, because essentially what happens is that if hospitalization rates reach a certain threshold, nobody who is unvaccinated can enter public spheres like restaurants, bars, etc. So it's more or less a lockdown for the unvaccinated. That's the general take here in Germany. Of course, that is meant to rein in the exponential growth of the virus spreading, especially in regions where vaccination rates are very low. So we have talk about Saxony going in complete lockdown. There are news coming out of Bavaria that certain hospitals are already completely full. And of course, that's the reason why Angela Merkel is so concerned now. And it is a bit of an unfortunate gap in between governments. And many people are not happy that Berlin has been waiting so long for coming to enact some sort of restrictions, because clearly the situation is getting worse every day. So we have incidence level never seen at record levels, and the biggest problem is that the hospitalization rate is going up as well. Essentially, if the situation will not be reined in, we are going to be in a situation where also the vaccinated need to get tested every day if you want to participate in public life. That's the situation as of now. What it means for the economy as a whole, we most likely will see a seriously dampening effect on economic growth for the fourth quarter. And people who are not vaccinated, they can't attend their workplace anymore. So they need to get tested every day, Jeff.
I'll pick up there, Annetta. Thank you very much indeed for that. Right, coming up on the show, XPeng launches a new SUV amid rising competition in the EV space. For more on this, we'll head out to the Guangzhou Motor Show after the break.
Now, you maybe notice we have 3 green candle here, because this is EFT gold and MT4. We don't have 3 green candle here. We have 1, then red, then 2 green. This is because this is future. You can see the price here is different, a little bit different. Like 1856, here we have 1858, because this is future contract. This is ETF MT4. So if you're trading on MT4, you need to watch your price, okay? Because whatever you trade on MT4 or future, just trade on your platform. Don't trade according, like if you're trading future, maybe this is a good short here, and maybe you don't take it because it's only 2. Here, if you took it short, yeah, it's fine, because we have a 3 green candle. So don't get confused between the MT4 and the future contract, and some platform is different than the other, okay? But right here, I tried to go short, but it was too late. I found the price came very quickly here, so I don't want to short here, and my target will be here. So that's why I didn't take it. It will be nice if we can get this price, or this price here. So I'm looking to short around this area here. This line or this line. Sometimes we do, like when the market comes, I usually buy, but it looks like the trend is strong. That's why I didn't buy right here. It's easy for me to go short. And also you can buy right here. And you make couple point very quick, but it's very risky. I rather trade with the trend. If this happen around this area here before London open, I'll maybe take it, but right now it's very tricky.
Apple shares rose to a new all-time high on Thursday's trade after a Bloomberg report said the company is aiming to develop a fully autonomous car by 2025. The iCar, as many have dubbed it, has long been rumored to be in the works. The latest report suggests Apple is considering building a vehicle with no steering wheel and no pedals, with passengers sitting along the sides of the vehicle, akin to being in a limousine. Meanwhile, shares of EV producers Rivian and Lucid continue to fall on Thursday after the massive run-up driven by the hype around Rivian's monster market debut 9 days ago. XPeng has launched its new sports utility vehicle, the G9. The Chinese company revealed the SUV at the Guangzhou Motor Show this morning. Shares in the maker of electric vehicles are down in Hong Kong after spiking nearly 10% when the launch was teased.
One technique you can do, like if you're trading future and you see support and you have all red right here, what you can do, if you break the support, you can go short. Okay, so this is one technique. If you are in red and you see you have a support here, okay, you can go short. If the market go against you a little bit, you can add one more because the trend is down, so you can add one here. I don't like to do that for a new trader because this is, you need to be advanced trader to do that because your stop is gonna be maybe bigger. That's why I prefer to do like 3 green candle, and when I see red I will short right here in this area so I can make more money. But a lot of time, sometimes we trade breakout, but you need to be an experienced trader to do that. Okay, like for OCN, you have green and you have a resistance. This line is resistant. If we break, you can go long and you put your stop loss under the low. If we cannot find a trade on the gold, maybe we have to do Forex. Let's watch it for another 20 minutes or something. If we cannot find any trade on gold or any setup, good setup, maybe we will trade Forex. Because you can see it's a lot of opportunity on the Forex market today than the gold. The price action on gold is really not perfect. It's not the perfect setup for me, but like here you have a buy signal, buy signal, buy signal, sell signal, buy signal, sell signal, buy signal, and sell signal. So let's wait a few minutes. If we cannot find anything on gold, I'll maybe trade Forex.
Thing really, and this is what we've seen. I like to sort of look at the smartphone market. The brands that have managed to make it have been those brands that have managed to come out with premium, very good products and market them in such a way. I look over to Chinese smartphone makers Xiaomi and Huawei, both started on sort of the low end of the market, brought up this kind of premium high-end brand with very good features. And I think that's very much going to be the key at this point with the electric car makers. They're talking a lot about their technology as well. What's inside the car, the chips, the autonomous driving features. These are are all pretty key, but can they market it in a way that is premium and compete with Tesla? In China here, Tesla has a very strong brand premium, people willing to fork out. I think for Chinese brands to go overseas, they're going to have to do something similar as well.
Yeah, we just sparked a debate around the desk as well, and Jeff was saying he disagrees slightly, but with me, not you. We'll come back to this debate. I think it's an absolutely fantastic debate to have. So thank you for that, Arjun, as well. We're going to head back out to Karen at the Women's Forum in Paris, where she has another special guest. Karen.
I do have a special guest. The minister's just stopped by to have a chat to me. Elizabeth Marino joins us now, Minister Delegate to the Prime Minister for Gender Equality and Diversity. Nice to see you this morning.
Thank you for having me, Karen Sue.
There's so many big topics here to talk about. And in particular, I think what stands out to me is that France has been one of the countries at the forefront of this gender diversity battle. Yet still, we're not seeing great numbers out of France when it comes to pay parity, women coming back into the workforce on the back of the pandemic. What's going wrong here in France?
So, first, I tend to disagree a bit because we are progressing. Are we progressing fast enough? Certainly not when we look at the numbers. But you know, the fact that President Macron has decided that gender equality would be the great cause of his term has significantly moved the needles. I'm thinking about violence against women in particular. And as you're speaking about gender equality in the professional environment, I'm telling you that we are to vote 2 laws in favor of women emancipation. And I have to say that, you know, we are coming from far on this topic. We still have a lot of stereotypes, a lot of patriarchal attitude. We have some women that still do not believe in their ability to bring power and to make a real change in this society. And I think it's a combination of multiple things. That's the reason why we are working on education. We are working on finding the right means to support women who are in monoparental families and who are struggling to manage their professional lives and personal lives. And we are also working on this law that will bring more quotas in companies. We sometimes speak about positive discrimination because we come from so far. If we really want to accelerate this movement, we need to force this dynamic through laws, and that's exactly what we are currently doing.
I want to pick up on that point because the president was very clear when he first came to office about putting diversity into his cabinet, diversity into the government level, diversity into board levels, and now when it comes to leadership roles as well across corporates. Does it actually work, though? What's the evidence that it does?
Indeed, it does. We have had multiple women nominated at positions where we had never had a woman. Today, in France, for the first time in 2020, we are at the Louvre. For the first time in our history, in the history of the Louvre, a woman is leading it. We have women leading the largest security organizations in our country. So we are seeing women taking the stage in positions that were only dominated by male for years. We have 38% of women at the National Assembly. That's the first time of our political history that we have such a situation. We have 42 women in the government. It's the major women rate we have had in a government. So yes, things are moving. But again, we come from so far. We have had decades and decades of patriarchal domination, masculine domination, and you cannot change these things in 2 or 3 years. So I think the dynamic is good. We should never give up because this post-COVID world really needs a more balanced leadership. We need male leadership, but we also need women leadership when we have so many struggles to address.
It is fantastic to see progress, but where we're not seeing progress is around the pay gap. And it feels as though the pandemic has had a role here. A lot of women have flipped back to carer roles, have not come back into the workforce. But I also feel like there's another problem. We are getting women into more traditional jobs yet again, right? Mm-hmm. But all of the big paying jobs are really in areas that are new economy, technology roles, for instance, that may...
So I don't see any good setup on gold, so let's try something on the Forex now. Maybe we should take Aussie is very strong and Euro is weak, so Euro Aussie will be a sell signal. Like if you join us 2 hours ago, I said the best trade was Euro Aussie. And you can see you've been making like 40-50 pips easy, because you have 3 green candle, you short, and this is the best trade right here. When you have sell signal, you look for 3 green candles and you short, or you can short right here. Now you got 2 signal, you don't have a chance to short again. This is another one here, you short at this price if you follow the 3 green candle rule. So this was a green candle setup here. So this is the best trade on, we took it early around Asia session, okay, and it's been doing very good. Right now it's almost 40 pip. If you take euro or something else, like euro dollar is not doing anything good, because euro is in a sales mode and dollar is also, so that's why you see here it's been in 10 pip range. Now we start to break in. Euro is more selling than the dollar, so that's why you see, but I don't expect it's gonna be like a big move, like 60-70, maybe 10 pips, 20 pips. If you take the pound with the dollar also, so we usually take 1 green against 1 red. So the only trade now, you can take the OC with anything, OC shift. So let's take a OC shift now. So what I'm looking for a buy. You wait for 3 green candle. I need to buy something like that, okay? Right now I'm waiting for 3 red candle, then I will have to buy. I don't want to buy at the top, okay? So you take, this is another trade we looking to go long if I see 3 red candle like that. So the OC franc, euro OC, and let me see, OC bound OC, bound OC. Bound OC will be a sell, okay? Because the bound is weak, OC is strong, so you need to sell bound OC. So this is the 3 trade I will be focused in next 1 hour. Also, if I see anything, or as long as this setup 1 green and the other is red, I'm looking to take a trade on those 3 pair, OC franc, euro OC, or bound OC. Okay, so let's wait for the right setup, and I will be on the chat room. If you guys have any question, please let me know. Have a great weekend, everybody, and that's it for gold trade session for today. Enjoy your weekend, but I will be on the room for another 6-8 hours until US close, okay? So you want to make sure if you have the right setup, you jump in, you know? If you don't have the setup, just wait, be patient. All right, guys? So I will be in the room. If I see a nice setup, I will call it, and I will let you know which trade I'm getting in. and I will talk to you later, guys, on YouTube. Tomorrow, we usually have a session on in Asia and London. 1 hour in Asia and 1 hour in London. Live on YouTube. But I'm in 24 hours on the chat room if you guys have any question. Okay, take care.